Good afternoon and welcome to the Takeaways podcast. On today's episode, we are talking about the Botswana Tech Fund, which is a recently launched VC fund, which is going to be investing in startups in the Southern Africa region. On today's episode, I'm with the general partner for the fund, Florence Bavanandan, and she's going to be taking us through the mandate of the fund and how the entire process of trying to back startups in the region is going to go as part of the fund. Hi, Florence. Good afternoon and welcome to the Takeaways podcast. How are you doing?
Hi, I'm good, thank you. How are you doing?
I'm all good. Just dealing with the weather that comes with the change of the seasons from the summer to the winter.
Well, being British, dealing with the weather is one of my fortes, along with talking about the weather.
Got you. So let's dive into the crux of the conversation. The Botswana Tech Fund was launched a few weeks back. So please just provide an overview of the fund itself, what the mandate is going to be and how the entire process is going post the launch.
Okay, so it is meaty. And we took a look at the ecosystem and the startups and their journeys and what has been successful so far and worked out what's not been successful as well. And so we created the mandate in order to fit that. So let's start with geography and the concept of contrarianism, right? So Africa in itself is a contrarian thesis when you think about VC globally. So contrarian thesis is where everyone is not looking, that's where the opportunity is. So no one, well, only the really clever people, in my opinion, is looking at Africa, right? Everyone's concentrating on AI and the AI boom and the West Coast. But that means the capital isn't flowing to Africa. It also means that that's where the opportunity is if you're a VC. So then zooming in slightly further, looking at the continent and then thinking about second tier markets. So you've got the big four. We all know about the big four, loads of capital flows into there. And that's great. And zooming in further to Southern Africa, we have South Africa, massive economy. You can start a startup there, scale it, make loads of money. You can list it there. You never have to leave that market. But what that means is that innovation never leaves that market either. So then we come back to opportunity because you have the surrounding countries, which are literally on the border, but do not have the same level of infrastructure in terms of like payment rails, fintech, e-commerce, last mile delivery. And so that's where this idea was born from. So the broad concept of the thesis is digitizing business in Southern Africa. So we're going to do that at the pre-seed stage, catalyzing digital innovation. So we're investing in 10 to 15 startups every 6 months for the investment period of the fund in the accelerator stage. So that is pre-seed, and those startups, we'd like them to come from Botswana and then the surrounding countries as well. So Namibia, Zambia, Zimbabwe, tech first, B2B startups, super early. But then we also recognize that we want to catalyze innovation further. And there are already great startups doing brilliant things that maybe don't have access to growth capital. So we'll invest at the growth stage. So we also have a mandate to invest from seed all the way through to Series C, which brings me on to follow-on capital. The most painful part of being a VC is having that incredible company that you invested in at the seed stage, and you didn't have either the mandate or the capital to follow on and maintain your ownership. And the maths of a VC fund is if you're investing in 100 companies and one of those companies wins, and that's 100x, if you've split all that money equally among the companies, you only get to return the fund. So yes, the fund returns, but you haven't made any profit for your investors or the other organizations you support in our case. However, if you've invested 50% of your capital in that 100x there, whoa, you are in the money. So it won't be as clear cut as that, and it won't be those kind of ratios. But the point is there. So really important to be able to follow on. Brings us to the slightly broader geographical thesis is that we'll also bring innovation out of Southern Africa. There are amazing companies there. Again, they're not motivated to leave that market. Their next look is probably to a bigger market. Maybe it's like they're going to expand to Kenya or even Rwanda, like somewhere further, like a bigger market. But we want to focus their eyes rather than thinking about single big countries they can go to. We want to say, okay, why don't you expand to Botswana, Namibia, Zimbabwe, and Zambia at the same time? Now you have a really broad critical mass of market size there. And we'll help you do that. We will help you with connections. We will help you with corporates. We will help you go to market in those places, and we will provide you the capital to do that. And then the third part is secondaries. So the ecosystem only exists because of angels. Power to the angels. These guys who, honestly, they have put in everyday people, right? Some are like super wealthy, but a lot of angels, everyday people who run businesses, who have like $5,000-$10,000 that they invest in. I want to say give. No, they invest in an entrepreneur, and they are ready to lock that money away for a really, really long time. But if we can help them to get that liquidity, not only does that liquidity recycle back into the beginning of the ecosystem, it also helps build that liquidity narrative for Africa, which we so desperately need. So there we go. Investing, accelerator, pre-seed, but also growth in primary and secondary.
The name of the fund is the Botswana Tech Fund, but from the way that you are, like explaining it, it sounds to me that it's going to be, like a regional fund. Is there a reason why, like, you decided to zone in, like, on Botswana? And just share more on that.
So there are two reasons. First of all, our anchor LP has a long and dedicated connection to Botswana. Second of all, Botswana is the perfect pilot market. It's just small enough that you can create network effect quite quickly, but it's also just hard enough that you really have to work out your problems first. So we even experienced it last week. 2 weeks ago when we launched the fund, right? So we landed in country. We'd already done a load of prep work beforehand, of course, that were connected to the ecosystem. But suddenly, within 5 days, we unlocked tenfold what we did before. And so what we want to do is we want to be able to put that same infrastructure in place for our portfolio companies so that they can go on that learning journey from A to Z of their first iteration, their first doubling journey of their revenue. They can make all those learning experiences in a shorter period of time than they would in a more established market that's harder to gain traction. So you basically do everything smaller and quicker. And then you're like, right, now we're going to take that into a new market. We're going to scale the company further. Not to mention also the infrastructure that is already there. So as you'll know, there has been for a while really supportive government for entrepreneurship. We have the Innovation Hub, we have the Innovation Fund in Botswana. There are multiple different accelerators. There's the Orange Digital Center, there's the MIT program, Techstars came to do a program. There's a real groundswell in entrepreneurship. We also have growing youth unemployment, 37%. When I most recently looked, it may have become more since then. We also have there's a friendly government to entrepreneurs. There's like a new free economic zone being created. This is a place that is open for business. There's no exchange controls. That is super material when you're thinking about payments and fintechs and scaling businesses, even as a VC fund. Exits, making payments, it's really material. So it is this just perfect ecosystem and fertile ground for building and scaling brilliant companies from.
I want to get into the structure of the fund, right? So, it's more of a dual strategy in that you're going to have like an accelerator and then the other part. I want to start now with the accelerator, right? The one thing that we know about, the ecosystem across the continent is that there is a lack of problems to solve, right? But still, when it comes to deal flow, where you can be able to, identify startups which are going to scale, in a venture way, is still pretty complex, right? So please share more on, how you guys are going to try to address that deal flow challenge through the accelerator.
So it is challenging, especially, and you're right, at the accelerator level. The seed onward level is a much clearer picture. These startups they already have traction and you can find them much easier. At the accelerator level, it's really about knowing that we can find diamonds for sure. Plenty of diamonds in Botswana, as we know. You can find them, but you have. We can go really far into this analogy. You have to mine them, you have to refine them, you have to polish them. And it's about coming to the deal on the same side of the table as the founder. as opposed to sitting across from each other and being like, what can we do for you? What can you do for us? What's your company? It's about sitting together and thinking, okay, are you a great founder? Are you a resilient founder? If the answer is yes, then that gives me the comfort to move on to the next stage, because it's all about, at this super early stage, it's all about the founder, it's all about the journey. It's actually not about the product. The product could be great, but if the founder is terrible, that doesn't matter. So it really is, who is this founder? So have they run a business before? Can they think about have they built a team before? Ideally, yes. If they haven't, that's also fine. It's like, how are you thinking about building a team? How are you interacting with us? Are you a collaborative person? Do you have a growth mindset? How do you take feedback? And then looking at the idea and thinking, okay, maybe this idea isn't 100% here, but could it feasibly pivot in like 2 or 3 different directions and that be monumental? I was watching, it was the DoorDash's team's YC pitch popped up on my LinkedIn the other day. And it was pretty similar to DoorDash now. And it made me think, like, that is probably one of the only companies that has stayed so true to what their original idea is. If I had a sharper mind, I'd be able to give you like three examples now of like companies that started as X that ended as Y. But it's really, it's about having the foresight as an investor to be like, okay, I believe in you and I can see where this company could go. How can we work together to get you from A to B?
I like that, you're going to focus more on the team in that. I mean, obviously the product and the market are like incredibly important to a startup, right? But I think, as you just stated, like a majority of the tech companies don't start with a particular product and then stay with that particular product throughout the entire time, right? Like they pivot, and then the market also changes a lot. So I think being able to back like a founding team which can be able to pivot, right? Like either like in terms of the product and the market is also important, correct?
Yeah, 100%. And the market is important. The market size is important. Again, this is where I think you mentioned a company that is suitable for the VC mandate and investment, because it's a really specific kind of company. So for example, you could be running a great business, but if it's asset heavy, it's not going to be a fit for our mandate. You can be an amazing business person running a traditional business that has grown really well over the past how many years. But again, that doesn't fit the mandate. Could even be like doing a green energy infrastructure. Again, it doesn't fit the mandate. So also for us, it's about having the discipline to be like, oh, this looks like a great deal. It's super interesting. But no, will it return the fund? Because ultimately the fund has to succeed, not only for the founders we've invested in and everything, but also for Africa doesn't need not another failed VC fund, but like any failed VC funds, right? Because when you're working in emerging market, people point the finger at the bad stories much quicker than they look at the successes.
Whilst we're still on the topic of the accelerator, I mean, in my past life as a journalist, I used to cover, like a lot of like accelerator to see what works and what does not work. And one thing that really popped out to me is that a majority of the accelerators then were doing like a great job of like imparting the soft skills to the founders, right? But the core challenge is always one, am I going to be able to get like some little bit of the capital from this? And then 2, even if I don't get the capital, am I going to be able to have the access to a network that is going to allow me to raise the capital, right? Then from the press release, I'm reading that accelerator for BTF is going to be cutting checks of between 25K to 100K, right? Can you share more on what exactly is going to drive how much you decide to invest in these particular startups, and then like in terms of the equity, how much will be taking at the accelerator stage?
So equity is easy. We're targeting ideally a 10% ownership in the companies, and in terms of how we cut the checks, we realized, again, when we were doing research for the mandate of the fund or the thesis, we realized that there are many wonderful accelerators, but they are not investing, right? They're not taking equity in the businesses. And so it was important for us that this accelerator does. Really, we are investing first and then accelerating second. And then also that check has to come at the beginning, especially when it's really, really early. We're expecting people to be full-time on the project. Something has to fund that. And so that's why we have the 25K at the beginning. So that is the first check. That's the general first check size. And that should be the OPEX for running the business for the first stage. And then at the end of the accelerator, upon completion of the whole program, which should be 3 months maximum, and completion of the KPIs, which are not set by us being like, you have to quadruple your ARR. You don't even have ARR yet because you haven't been alive for a year. Like, it's about co-creating those KPIs with the founders. Again, it's not about, are you like hitting these like insane growth metrics at this stage? It will become about that. But at this super, super early stage, it's about, are you making a plan? And are you executing that plan? And are you hitting those targets? And if you're not, how are you reevaluating that? So together, we create those KPIs. And so upon completion of the accelerator and the KPIs, then the startup unlocks another £75,000. And then we would like to see us doubling down on those startups every single point of their journey going forward. Realistically, we're not going to have 10 from every cohort that go all the way through the fund, but we should get 1 or 2 that go on to raise a seed, Series A, Series B, Series C.
Just to make sure that like I understand properly, right? The check sizes, I know that you'll be giving like startups in a range of from 25K to 100K. It's that at the beginning of the acceleration program, you'll be cutting them a check of like 25K for the OPEX, etc. And then at the end of the acceleration program, after 3 months, then that's when you be rest of the amount, correct?
Exactly. So it's 100K if you finish, 25K if you don't. But we really want you to finish, and we'll help you finish.
In terms of the acceleration program, I mean, this is going to be, like a regional fund. So I'm assuming that, like funders from like, like Zambia or like other countries are going to apply, right? How is that going to work? Is it going to be like a remote program and then you have some days where they're going to be in person, or how is that exactly going to work?
Yes, great question. So it is hybrid. So the first 3 days are in person together in Gaborone, and then we'll do the next 5 sessions remotely. And then the last 3 days all together in Gaborone with a demo day at the end.
I want to now move to the growth stage of the fund, right? So as I already stated at the beginning, it's going to be, like a dual strategy, right? In the region and across the continent, of course. The challenge that we have always had is that even if you have like startups which are able to either do like bootstrapping or get the angel investment and eventually grow to, the growth stage, there's not a lot of the growth funds on the continent, right? So that's always been a challenge. So like in terms of you guys, how exactly are you going to try to address that? So you can dive deep into exactly how the growth part of the fund is going to work.
Yeah, sure. So again, for us, it's super important because the last thing you want to see is a really superstar company not being able to raise that growth fund. There's also the contrary argument, which is a really superstar company would always be able to raise their growth rounds. But giving us a little bit more control over the process by being able to invest and potentially lead those growth rounds was a really big part of the mandate. I think also it's about bringing hopefully some more international capital onto the continent as well. So when we get to Series B, we'd love to see our companies raising from European funds. And, Martin and my network as well, being very well networked here in the UK, very much doing European roadshows for those superstar portfolio companies.
A company that's at the accelerator and the early stage is quite like a different company to, that one that's at the growth stage. Because at the growth stage, like a founder has to think about, exit planning, and being able to scale to the markets that a founder does not come from, etc., etc. How are you going to try to take them through that challenging process?
Great question. It's about having the right people. You're foolish to think that you can do everything yourself. It's not possible. But we 100% know someone who can do every single stage of that journey. I have multiple years now working on the continent, really well networked here, in terms of go-to-market, corporates, the networking that we have. Martin the same, but in the UK and across Europe. So at the drop of a hat, as a VC, you always want to be able to, when a portfolio comes to you with a problem, either you solve it or you connect them within hours to someone in your network who can solve that problem for them. So that's how we approach that problem.
The role of the Launch Africa, how is it going to be a part of helping those particular startups to be able to address those challenges?
Well, Launch Africa is only an early stage investor. So that's where this Launch Africa expertise is focused on. And of course, so this is something that we kind of need to build out for the Botswana Tech Fund, first and foremost. But for the early stage, Launch Africa, I've built with my colleague Jeffrey our platform offering over the last 4 years. And we've gone from very minimal support to startups to having $1.5 million worth of credits available for our startups. We have multiple workshops going on every single month. We have a thriving founder community of over 350 founders, all ask each other questions all the time about, I'm going to do this. Does anyone want to know how to do this? And again, it's not only about having network, but it's about having access to that network that's in your pocket, and you can access it super quickly and get an answer within minutes, which as a founder, minutes really count.
Whilst we're still on the conversation of the growth stage, how many startups are you going to look to back there? And can you share more in terms of the sectors that you'll be trying to look at?
Yes. So we are looking to back over the lifetime of the fund, somewhere between 10 to 30 growth companies. It depends on whether they come from our portfolio through the accelerator or from outside of it. We don't know yet, but somewhere around there. We are at a real inflection point of AI and SaaS and the kind of businesses that we're looking to invest in. So even, I don't know about you, but even myself as a consumer, obviously we're not investing D2C at all. But as a consumer, my usage of SaaS has completely changed since the advent of AI. There's so many things even small productivity tools that I would use before that I just don't use anymore, and I create my own on Claude, or I use Replete and create my own there. And then I see that coming into our business. For Botswana, I would really like us to have agentic workflows for portfolio management. All of the companies that we're investing in, I'd like them to be AI native. Very much looking at, can we create an agent before we hire someone, which is, for a fund that wants to create jobs, it's also that's a tension that we have to manage. But again, what we're really looking for is really highly scalable companies. So bringing it back to the thesis and where I really see the opportunity, I'm looking at resilient sectors. So infrastructure, payments, as tech as infrastructure, so payment rails. So for example, we'd love to find a company, if you think about Botswana, loads of people. So we've gone from everyone using cash if you're unbanked, to now having a wallet. But how can we then take that wallet system and make it so that you can use your wallet to make payments in shops? So vendors are being able to take payments. So you can get savings, get an interest rate on what's in your wallet. You can start to take out credit based on your wallet history and repeatable payments. And then we scale across the continent. And it becomes a challenger brand to other wallets and other fintechs. So that kind of thing, where it becomes part of the layer of infrastructure, is what really excites me.
Of your focus on B2B startups, right? I mean, over the years, I think we have seen a lot of the B2C startups which have managed to scale quite well. In terms of your focus, on B2B startups, is there a particular reason why you want to back those particularly?
We see that working B2B as the biggest opportunity. 90% of business across the continent is done by MSMEs, which is a vast market. So suddenly, instead of thinking about which consumers would use some kind of app, you're thinking about, okay, what would 90% of the market use to help them do their business? The market size is really important when you want to make a return for your fund. So that is why the B2B thesis is there. And it's all about digitizing business. How can we make business quicker, make more money, and help people build wealth and prosperity for themselves and their families? Because ultimately, also, if you help the businesses, then you help the employees.
In terms of the check sizes, from the press release, it states that it's going to be between, 500K to 2M, right? Can you just share more again on that? And, in terms of the equity, how much, would you looking to take from the business?
So we always want to be maintaining at least a 5% ownership. Very important for exiting. At this stage, that check size works for getting that ownership level in the companies that we're targeting. Maybe things change in 2 years. We've already seen Series A multiples change in the last year. So at the moment, that's what works, but we have some flexibility to be able to write larger check sizes as the fund progresses, and as the landscape changes.
The other thing that I want to get your view on is that, your decision to back startups which are trying to expand to the region over here, right? What drove that? Because I think, if you look at the figures of the VC inflow on the continent, it's mostly been in West Africa and then East Africa, and then in North Africa, and then we come last because a majority of the VC capital has been going to South Africa, right? What's the value proposition there for startups from the rest of the continent to try to expand to the region over here?
Exactly. You come last. That's the whole thing. That's where the opportunity is. Wherever is not being invested in. And I think, look, there's an argument to say if we take Botswana, it's such a tiny market, 2.5 million people in a really large landmass. So it's understandable why that has never been a target. And then you say the same for Namibia as well. But again, when you start to, I don't want to say lump, but start to group Southern African countries together, then you get this critical mass, which is also important for the currency risk as well, for a fund, but also for a business, that you're splitting your currency risk across multiple different currencies, which just gives you a little bit more wiggle room. So yeah, totally understandable why people aren't saying, I want to only invest in Botswana, which is also what we're saying. We're not saying that at all. We're saying we want to build companies out of Botswana that expand across Southern Africa.
As we get to the end of our conversation, right, you also stated at the beginning of the podcast that there's going to be a liquidity, aspect of the fund through the secondaries. Can you share more again on that, in terms of how's that going to work?
Let's say Series A startup. They have anywhere between 30 to 300 people on their cap table. 300 is probably a bit insane, but I'm thinking about one I looked at recently and it was nearly there. And especially if people have raised from a lot of angels who didn't do an SPV, for example. So there's lots and lots and lots of angels. Those angels have maybe been on the cap table for 7 years. They are approaching 3-5x on their investment, which is great. Ding, ding, ding. They are happy with that return. So then you get a critical mass of people where you can take them out of the cap table. And then, so for example, for us, let's say we want to always maintain our 5% ownership. We could maybe only get a 2.5% allocation in the round, but we can get an additional 2.5 or even a 7% from cleaning up those angels. And so you're also getting this exchange of expertise on the cap table as well, from the early stage angels to now the institutional capital. So you kind of swap it out, clean it up, and then take it forward. So it's very similar practice in pre-IPO VCs, where they will take the cap table, they'll totally clean it up ahead of an IPO. This is just doing it at an earlier part of the journey.
Yeah, and it also it gives a chance to all those investors to be able to have an exit at that particular stage, right?
And also a lot of team have options that are vested. They're sitting with significant capital in the company, in their shares, and it makes it real. They're able to liquidate that, and it can be life-changing.
True. An interesting aspect of the fund is that a certain portion of the ROI is going to go towards the Tulu Conservation Trust, right? Can you just share more on why that was a decision in terms of the fund, and how you are trying to contribute towards this, trust?
Yeah, of course. So it's important to be clear here that as the VC fund works, you have the 80% of carry that goes to LPs and then the 20% that goes to GPs, and we allocate from the GP carry. So of that amount, of the investment return past retaining the fund, that is allocated to the trust, a portion of it. And the reason for this is that the fund was born from Steve Lansdowne and Martin's discussion around employment in Botswana and conservation, and there is a delicate balance between the two. And if you add in a third of one of the primary industries in Botswana, which is tourism, so if you have rising unemployment, you get much higher poaching, and if you have much higher poaching, you get far less tourism. So it's about how can we create more employment, more economic wealth, more economic prosperity, so that people don't go out and poach, but also we then protect the tourism industry as well within the country. Again, and also the surrounding countries, right? We all know that elephants don't see borders. So it's also why you can't just be like, we're just going to do it in Botswana, because poaching is a borderless problem. And again, just like we've talked about in this conversation, it's all about ecosystem. So yes, invest in growth stage companies, but in order to have those, you need to invest in the early stage. In order to have those, you need the angels, and then you're recycling the liquidity. So everything that we do is really ecosystem minded. We want to be mindful of all of the value chain and our place in it and how we contribute to every stage.
I've been in the ecosystem for a couple of years now. It's so great to see a fund that's really, trying to grow the ecosystem, like in terms of the availability of capital. I wish you and the team all the best, and I know that it's going to be quite a journey.
Thank you so much. It will indeed be quite the journey.